Alright, what's going on, everybody? It's Lundo2K. In today's video, we're going to be going over SMT. Some people call this smart money tool. I've heard it called smart money technique. But essentially, all you're looking for is a crack in correlation between these three indices. And if you trade Forex, it could be the same thing between, say, DXY and Euro USD. You could be looking for the same thing there. But I trade indices, so I'm going to go through what I know to be true. And we're just going to jump into it here. So let's say we're looking for a bearish reversal on ES, right? And we have ES go up, and then it makes a higher high. And whilst it's doing that, NQ follows along. It also makes a higher high. But YM fails to make a higher high, right? So we have ES higher high, NQ higher high, and YM makes a lower low. So you can see that here. I'm just going to draw it out. Higher high, and then lower high here. So this would be a crack in correlation. So this would be like your first hint, right? As my model, I have to see this in order to change my bias. So it would be like this if you're looking for bearish, and then it would be the same thing, but with the lows, right? So let's say ES makes a lower low, and YM makes a lower low, but NQ fails to make a lower low, right? So you have a lower low here, you have a higher low here, and then you also have a lower low here. So essentially all you're looking for is a crack in correlation. So it's where the indices, for instance, if NQ made a lower low here, then it wouldn't be valid. Right, so even if I got a market structure shift here with a fair value gap, I would not take this trade unless we had a crack in correlation like this. So SMT essentially is just a crack in correlation between these three indices. That's all you're looking for. If I don't see this, I don't take a trade. This is like my first rule for looking for a smart money reversal within a market maker model. So what would this look like on the chart is what you may be asking. So what we're going to do is jump straight into the chart from this past week's price action. So if we just go into a weekly, here we are on ES. This is our weekly chart, right? So here, let me take this away. So here we have a weekly fair value gap, right? We have a candle 1 here. Here's the high of the wick in there. And then we have the wick here with this gap in between. This is your fair value gap. So this would be our higher time frame PD array where we're looking for a reversal, right, to go back up. So if we go into an hourly now, here's that weekly fair value gap drawn out in time and brought over here to the 1 hour time frame. So here's our weekly fair value gap. We can see here on ES, we make a low here, we get a pullback, and then we make a lower low here. So we have a lower low there. Now if we go down into these, you can see while this was happening on ES, was making this lower low, you can see we had a lower low on YM here, lower low. But on NQ, which is this in blue, right, we have a higher low. So this is our crack in correlation here. So this is your first hint that price may be switching back bullish, right? Then you would have to wait for your market structure shift, and then you could get involved with a long, right? So Just blindly buying this because you see a cracking correlation without the market structure shift means nothing, right? This is gambling if you're buying it here. You want to wait till you see this market structure shift. Now there are ways to do this and buy this, but we'll go over that in a later video. Right now we're just focusing on SMT, right? So what I like to do, I have a template set up, SMT between both of these, and I will have it marked out. And then usually I will put it on the bottom. So then I can take these back away, right? Now I know I have a SMT here. I'm looking for a breaking structure through this high. So how could you have used this for a trade today? Let's go into the 5-minute chart and we'll look at that. Sorry. Bit clumsy here. Okay, so here we have our 9:30 open. Right, so this starts our kill zone. This starts our New York kill zone. I usually draw this line out to about 12 o'clock. So I have my kill zone through this line. So here's that 4-hour market structure shift line, which you can see gets broken here. Okay, so what we have here is you have sell side below this low, right? So you get a swing low, another high, and then you get a swing low here, right? We have our SMT here on the 4-hour, on the 1 hour. So we're looking for higher prices through this line, right? So what you would be doing is here would be your first clue. So we're specifically looking at between this low here and this low here. This is what we're looking at. So if we draw that same low here on NQ, we see we have a higher low there. So we have a cracking correlation. ES is trying to go lower while NQ is not agreeing, right? NQ is saying, well, I'm going to make a higher low. So you have a cracking correlation. And you also have YM down here, which also made a lower low along with ES, but NQ wasn't agreeing. So this is your first hint that price may be getting ready to reverse, right? So if you were looking to take a short here off this market structure shift, you may want to change your mind if you see something like this. So it can give you a trade idea, or it could keep you out of a trade. Right? I see a lot of people using this for trade ideas, but then they're not watching it to confirm the trade idea the other way, right? So you may be looking to take a short here, but then you see this, and NQ doesn't want to follow through. And then what happens? So we understand we have SMT with NQ here, right? While we also have it between these two lows. So we're looking for higher prices through this high. So once price aggressively breaks back through this high, as well as through that 4-hour high, this price leg here is going to turn into a breaker block. So we have a 5-minute breaker in here. You could say bullish breaker. So price aggressively trades through, shift structure. You have a SMT at the lows. So that's one reason here, SMT. You have 2 reasons here. You have strong displacement, right? 3 would be this bullish breaker. 4 would be these fair value gaps in here. So you can see price trades back into the breaker. This would be your trade idea. You would give some room for a stop loss. Me, I usually just don't want to see it go below the entire breaker. Now you could be using the first candle here, and then your stop loss could be here. But I like to use this entire leg here because on a higher time frame, say like the 15-minute, you can see that this is just one candle. So we could use this 15-minute. and put our stop below that, which gives us about a 5-point stop loss. And then you could target, 2 to 1, 3 to 1 here, you have 4 to 1 here. And price really ran away today. Why? Because we have SMT in a higher time frame key area, right? So you would have these partials along the way, but you could be holding runners and just trailing your stop, right? Because if we go back into the lower time frames, you can see that there was no real moves against you after this. You get a strong move away again. Price trades back into this fair value gap here, runs away, and you can see all day that these fair value gaps were just holding price up. That's SMT. That's how I use it to stay in and out of trades. And if you enjoyed, please leave a like, subscribe, go follow me over on Twitter. I'm active there just about every day. There will be a new video every Thursday. So until next time, be safe.